All right, let's talk about one of the most important and, let's be honest, confusing parts of trading, the time frame. Because if you can get this right, you'll find a trading style that fits you, your schedule, and your personality like a glove. So let's dive right in.
Does this look familiar? You open up a chart and the price is just bouncing around like crazy. It feels totally chaotic, super stressful, and just impossible to get a read on. Look, you're not alone. I think every single trader has felt this way. But what if I told you the problem isn't the market? What if it's just the way you're looking at it?
You know, it's so easy to fall into what I call the time frame trap. That's when you're constantly flipping between different charts, getting completely different signals, and just feeling totally lost. You start to blame the market, but the real issue, you're just using the wrong lens to see what's actually happening.
So let's fix that right now. We're going to start from the ground up and decode what a time frame actually is. My goal here is to give you that confidence and clarity you need to pick the right one for you.
Okay, so what is a time frame? It's actually super simple. It's just the chunk of time that each candlestick on your chart represents. So if you're looking at a D1 or daily time frame, each one of those candles shows you a full day's worth of price action. But if you switch to an M5 chart, well, now each candle represents just 5 minutes. That one choice completely changes the picture you see.
And here's something that trips a lot of people up. A time frame is not the same as a timeline. Think about it like this. Say you're planning a trip to Phuket. Your time frame is the total length of the trip, right? Maybe 5 days. Your timeline, on the other hand, is your schedule, what you do on day 1, day 2, and so on. In trading, your time frame is your analytical lens, not a schedule you have to follow.
All right, now for the fun part. The absolute best time frame for you depends completely on who you are. We can pretty much group traders into 3 main personalities, and each one has a time frame that just clicks with their lifestyle. Let's see which one sounds like you.
First up, we've got the action junkie, the thrill seeker, the short-term trader. You probably know them as scalpers or day traders. These are the people who thrive on that high-speed action, getting in and out of the market, sometimes dozens of times a day, to catch those tiny, rapid price moves.
But it's a trade-off for sure. The pro? There are tons of opportunities to make a profit every single day. The cons? Well, it's incredibly high stress. You are literally glued to your screen, and you have to deal with a lot of market noise, false signals that can trick you. This style is definitely not for the faint of heart.
So, if that high-octane style sounds like you, then these are your playgrounds. The 1-minute, 5-minute, 15-minute, and 30-minute charts. That's where the short-term trader lives. All right, next up is probably the most popular style, especially for people who have, a day job or other things going on. This is the swing trader. They're all about finding a balance, holding trades for maybe a few hours or even a few days, trying to catch one solid swing in the market. And the benefits here are pretty obvious. The signals you get are way more reliable because you've filtered out all that short-term noise. Plus, you don't have to stare at the screen all day. The flip side is you'll see fewer trade setups, and you do need a bit more capital to handle the bigger price moves while you're in a trade. For so many traders, these time frames are just the sweet spot. The 1-hour and 4-hour charts give you this great balance. You get enough detail to find good entry points, but without all the constant stress of the really fast charts.
And finally, we have the patient strategist, the long-term or position trader. These traders think more like investors. They are focused on the huge, overarching trends and couldn't care less about the little daily wiggles. They might hold a single trade for weeks, months, sometimes even longer.
Now this style, it offers the highest quality signals and is by far the lowest stress. It's perfect if you want to place a trade and maybe check on it once a day or even once a week. But, and it's a big but, it requires a ton of patience and a larger account size to ride out those big long-term market swings.
The tools of the trade for the position trader? It's the daily, the weekly, and the monthly charts. These charts strip away all the distracting noise and show you only one thing, the major, powerful trends that really drive the market over time.
Okay, so you've met the 3 main trader personalities. Now it's time to figure out where you fit in. We're going to do a quick self-assessment, and I want you to be really honest with yourself. Let's find your perfect match.
First things first, personality. Are you the kind of person who needs action? You see an opportunity and you just want to go? Or do you like to sit back, analyze everything, and wait for that perfect A-plus setup? If you're impatient, shorter time frames will probably feel right. If you're patient, you're going to be much more comfortable on the longer ones.
Okay, next up, and honestly, this is probably the most important question. What does your real life look like? How much time can you actually commit to this? Can you watch the charts all day long? Or do you just have a few minutes on your lunch break and maybe an hour at night? Your schedule is a non-negotiable, and it will point you to the right time frame.
And last question, how do you feel about risk? What's your gut reaction? Does the idea of a trade moving against you for a couple of days make your stomach turn? Or are you okay with weathering those storms if it means a potentially much bigger reward down the road? Your answer here is huge.
All right, so once you've found your primary time frame, your home base, you can take your trading to a whole other level with a technique that pretty much every single professional trader uses. This is how you really get an edge.
It's called Multi-Timeframe Analysis, and it sounds way more complex than it really is. All you do is start big. You look at a large time frame like the daily chart to see the main overall trend. Then you zoom into a medium one, like the 4-hour, to confirm that trend is still intact. And finally, you zoom in one last time, maybe to the 1-hour chart, to find your perfect, precise entry point. It's all about making sure you're swimming with the current, not against it.
So as we start to wrap this up, there's one central idea I really want you to take away. There is no such thing as the best time frame. It just doesn't exist. There's only the best time frame for you. This is all about making your trading fit your life, not the other way around. And remember this, a time frame is not a rule that's set in stone, it's just a lens. It's a tool you use to bring the market into focus in a way that makes sense for your goals, your personality, and your schedule. The whole point is to find the lens that gives you the most clarity and the most confidence.
So I'll leave you with this. After everything we've talked about, looking at your charts, looking at your life, the crucial question is, are you looking at the market through the right lens? Because finding the answer to that question, well, that's the first huge step on your path to becoming a consistent trader.